All right. Good morning, ladies and gentlemen. Today is Wednesday, June 12th, and I'm doing another edition of the Investing Systems Trading Service live show. And it's going to be interesting today. We will take a look around the overall market and we'll look at some of the ideas we've talked about over the past couple of weeks, see how they're doing. We'll take a look at the stocks that I favored last week when we were doing the show. We went over some of the pending trades and the ones that had triggered, and we'll take a look at those and review them. And also, we will take a quick look at the ones that are triggering for today. So that's usually what I like to do on Wednesdays. But first, let's take a look around the overall market indexes or indices, whichever you prefer. First of all, S&P 500 zooming out for a ways. I like to start off by zooming out to last October. This little green circle here is supposed to be on this one particular day here, which is Fed Day, right? That's a day where the Fed raised interest rates for the ninth time in a row, I believe, and a few days later, market peaked, had the big sell off, right? And so I know that there was Fed days in between here, but what's interesting about this is that the most recent Fed day, where they left rates unchanged, was right here, which I have circled. And the most interesting thing about this one, which was on May 1st, yeah, it was on May 1st. You'll sell in May and go away. It was the all-time high in the S&P right at the open there. The all-time high, which was just slightly above these prior all-time highs. So, yeah, I mean these are really close. This is almost like indistinguishable, but there's a slight difference between the intraday highs on those two. But it's just amazing to me how the Fed meeting sort of the market had like a real steady run up over here, just a real nice sort of run up, and then you had that Fed day, and then boy, things came unglued pretty quickly, and so Fed days can be reversal type of day, right? And so, which brings me to this vertical line that I have marked on the chart here. This is the upcoming Fed day, which is next Wednesday. And so, it's kind of important because right now, I mean, the entire market and the discussion over the past couple of weeks, and especially surrounding this latest little dip that we had here, is about the Fed cutting rates, right? I mean, that's what everybody's looking forward to now. That's kind of what, the main support under the market is, right? Because the trade war with China hasn't gone away. If anything, um, I believe, if I'm not mistaken, it was like July 5th. In fact, I'm pretty sure of this. July 5th last year, CNBC put an article out that said, the trade war officially starts today. And so, I mean, we're literally like just a few weeks from the trade war being an entire year old. The tariffs on China, basically. And so the official start of the trade war, according to CNBC, was when we slapped those tariffs on China, and they retaliated with some tariffs of their own. And so that kind of has the Fed concerned, and of course, I mean, there's all this. The administration is like, keeps talking about how the Fed shouldn't have raised rates and they should be cutting half a point and all this. And so, anyway, it's just, there's a lot of noise, but it is, in fact, sort of a news driven market. A lot of news driven type of activity. And so, anyway, zooming in a little bit here. So, let's see, 1 week from today, 1 week from today is going to be the Fed announcement where there's a very slim chance that they're going to cut rates, right? But just like Powell said last time and has been saying, is that the Fed is going to stand ready to cut rates. But the thing of it is that, and I know you guys have seen this, what reading the financial news or watching CNBC or whatever, that that there's like there's there's I forget what it was this morning, like 75% chance of a Fed rate cut in July. And so that's what everybody's going to be, looking for here is is Powell saying that they're likely to cut rates in July because that's what the bond market's pricing in, obviously. And so anyway, next Wednesday, a day from today, is going to be it's going to be a wild day because if the Fed disappoints, or if they disappoint in July, but I mean, if the language isn't right, a week from today, then we could be in for, we could be in for another one of these reversals. And so that was kind of my point there is that the funny thing is that this latest little rally right here, like I saw the guy from Goldman Sachs on, I think his name's David Costin was on CNBC yesterday, and he said that Goldman Sachs year-end price target's 3,000, and quite frankly, at the rate that this market had been climbing here, right, 3,000 is like a couple of weeks away if it were to continue on the current trajectory, which is very unlikely. So this is a pretty interesting pattern. Quite frankly, it was sort of easy to spot the pivot low, right? The pivot low like a couple of days in, but the straight up sort of nature of this is like 5 or 6% straight up, kind of seemed almost like a short squeeze of sorts, or just very kind of unusual. I mean, typically, you get a little pullback, you get a pivot low, and you move a little bit higher, whatever. But this was kind of an extraordinary, few days we had here. And so then you had this sort of almost like a gravestone doji type of thing here on, I saw it was Monday. And then what was really weird was the big gap up yesterday and then sort of the fade. So kind of hard to tell what happens here, but generally speaking, you see a run up like that, you get a, if this was a candlestick, that's about as close to a sort of a bearish engulfing candle as you can get. But anyway, watch yesterday's low. Yesterday's low, I think, is kind of important, because you break yesterday's low, and then this becomes a pivot high, basically. To me, I mean, it already looks like a pivot high, and so the market's just kind of acting weird here, which is about typical. This was actually a nice orderly sort of pullback. You know, the concerns about the fact that the Chinese tariff thing, the trade war, has not been sorted out, and people are starting to think, man, this could really drag on for a long time. And then obviously concerns over that the economic data is not all that great, right? The jobs numbers last Friday missed, and so let's see. So today, this morning, the CPI came out, and it's funny how they interpret the headlines, or I guess they choose like what to report for the headlines, because CNBC kept saying that that the CPI was like 0.1%, which met expectations, blah blah blah, and so I didn't see where they actually said anything about it being 2% year over year, and so basically, the CPI is running right where the Fed wants it at 2% year over year, and it's kind of tough for them to cut rates with you know the unemployment rate the official unemployment rate at 3.6 and inflation running right at their target of 2%. And so they're in a tight spot, right? And this whole thing about until this sell-off happened last fall, their plan was to continue to reduce their balance sheet and continue hiking rates and all this. And so, now with the Fed funds rate at 2.25%, they don't have a lot of ammunition, although our interest rates are higher than, most of the civilized world. And so that's a really sort of bizarre environment. It's a bizarre environment as far as like all the macro goes, but and it's a bizarre environment as far as the chart goes. I mean, to have this little sort of dip and then immediately reverse course and rally like 6% in just a few days is kind of odd. But anyway, it is what it is. Right now is probably a pretty good spot for the market to sort of run out of steam and maybe pull back a little bit. Here's what I was here's what I'm seeing on the chart sort of is okay, so you had this Fed day back in October. You had that first sort of sell off and then a little bounce and then another sell off and then a bounce, that this bounce right here that sort of took you back to the vicinity of where you started. So you had the same kind of thing here. You had a little sell off and a bounce, a second deeper sell off, and then a bounce and this time it overshot a little bit, right? Like like in theory, I was thinking it was probably going to stall out right around these highs right here, and it overshot a little bit. But so the big question now becomes, let me pull that down there. The big question now becomes, whether it retraces, like some of this big move right here, or whether it kind of consolidates a little bit. So yeah, this is kind of weird because normally I look for, like today I'm looking to see, what happens at yesterday's low. But the day before's low, like I'm sorry, Friday's low here, way down here, 28.51. So, I mean, if you think about it, from this low right here, 27.28 to this high, 29.10 is that's a huge move. So, and I don't think anybody, the thing of it is, whatever happens between now and next Wednesday is practically meaningless because everybody's going to be focused on the Fed language, and that has the potential to reverse course. So what I was sort of thinking is if for some reason the market did rally all the way back up to the highs, which is not totally out of the question, right? It's not totally out of the question, that we're back somewhere around the highs. That would have me a little bit concerned because the last time that, the market was right up against this area up here. You could call this, 29 29.10 to 29.50, just anywhere up in this zone. And the Fed, and it was Fed day, right? The market like subsequently took a little bit of a winger. So here's the more important thing to me anyway, as far as like the average stock, literally like the if you had like all, I don't even know if there's 5,000 stocks anymore. The Wilshire 5,000. I think that there's less stocks than 5,000. A bunch of them are foreign companies. But anyway, long story short, if you just like randomly took every single stock in the market and just threw a dart and picked 20 of them, if you had them on a big piece of paper, a lot of them would probably resemble the IWM more so than, say, the S&P, right? Because I look at a lot of stocks that peaked out. Some of them, peaked out in 2017, right? There's a lot of stocks that peaked back here towards the end of 2017, and they never made it that high. But last summer, last August, the Russell peaked, and when it sold off in the fall, it had a good bounce, and then it's kind of been meandering, right? And so I mean, don't get me wrong. There's a lot of stocks that are at new highs, and but there's also a lot that are not, that are just sort of, they've had rallies and kind of meander. But anyway, I'm getting at is that this last sort of sell-off here was fairly substantial, right? It was a fairly substantial sell-off in the average stock, and so this is what I'm seeing here on the Russell, is like sort of this megaphone pattern, which makes it a little bit tricky because you had the big run up and then the first sort of pause, first sort of little dip, and then hit a higher high, and then this most recent sell off, you had a lower low, which creates a megaphone pattern. And so the big question here is whether, if this is able to rally up to the top here. I mean, typically you get like these zigzag patterns. So if it's able to rally up to the top here, you'll see the Dow and the S&P at new all-time highs, right? That would be a big rally. Or, you know, it may take some time here. I mean, it's even possible that it starts to roll over a little bit here, but yeah, it's just kind of interesting. If you look at the Russell here, this same rally that you had in the S&P is not like, every day straight up. So this is probably a more accurate representation of just your average random stock since the beginning of the year, right? So let's look at the Dow real quick, and then we will move on. On the Dow here, I've been looking at the weekly chart because it makes sense to look at this bigger picture on the Dow, because this is a huge area of resistance. So, three times the Dow rallied up to this sort of zone. Um, you know, 26, 26.7, 26.8 roughly, but it stands out pretty well there, right? Stands out pretty well as sort of a triple top. And even though we had what, 2 or 6 weeks of sell off and then the big green candle, that doesn't necessarily mean that it's just gonna bust out here and keep going. Although it could, I mean, anything's possible. But to me, this stands as like a major area of resistance. Now, it'd be interesting to see if the Dow was able to rally up there, kind of hang around under it and break through. I think it would probably have a fairly decent chance of getting through. Like I've been pointing out for a while here, the fact that the MACD has sort of crossed over for the third time in a row. Although interestingly enough, it's kind of flattened out with this strength here, starting to come back to the zero line. So just because the MACD crosses over doesn't necessarily mean you're going to get a really, deep pullback on it. Like I've seen, plenty of times where the MACD histogram crosses over, and then you get some strength and it comes right back above the zero line, and it was sort of a fake out. But to me, it's a little bit of a yellow flag, right? The fact that you got kind of this big level of resistance up here, and that's all it is. I mean, there's just because there's a big level of resistance doesn't mean the market can't get through it. But if you recall, back here a few weeks ago when we were right up there, the sentiment was like over the top bullish, and it seemed like everybody thought, oh, here we go, we're just gonna plow right through it and go to the moon or whatever. I mean, I remember it right back here, thinking to myself, looking at this, thinking, okay, it's a pretty heavy level of resistance, but it just seemed like everybody thought, and because of the strength, obviously. So what happens is, I've noticed that it's not just a function of price. A lot of it's a function of time, right? And what I mean by that, as far as like the sentiment goes, is this little rally. I'm gonna say this little rally right here, like that little rally right there was, what day was that? On 4/1. Yeah. April Fool's Day. right? The April Fool's Day rally. You had kind of pulled back a little bit and chopping around, and then on April Fool's Day, right? S&P like gaps up and pushes higher. And then, look at all these days here. I mean, literally from April 1st to May 1st, right? And that's kind of weird if you think about it. It's kind of strange that all of a sudden on the first of the month you'd get like this, and after a little pullback that you get this big gap up and a push, to sort of continue this trend. You can almost like lay a trend line across these highs here. But anyway, so the April Fool's Day rally lasted all the way until the 1st of May. So it was the whole month of April. And so by the time that you got up here, I mean, by the time that the month was over, you couldn't even think of a reason why the market would pull back, right? And the sentiment was, I would characterize it as extremely complacent. I suppose would be the best way to say it. It was just extremely complacent, and so and I would sit here and I'd think, okay, just based on an entire month of like slowly grinding higher, and of course during that period of time, every other day, the administration would come out and say that that they were about to have a deal with China, right? And Larry Kudlow came out and said the economy's doing great, firing on all cylinders. The normal stuff. Unemployment's low, inflation's low. Interest rates are low. Everything's perfect, and as I mean, what makes all this so weird is that on one hand they tell you everything is so great, and on the other hand they're pounding the table for the Fed to cut rates. And I mean, the Fed's doesn't cut rates when the economy's great, and everything's firing on all cylinders and all that, right? So it doesn't work that way. So you can't have it both ways, and quite frankly, I don't believe any. Man, Larry Kudlow and you can go back like, 6, 8 months, him saying that, a trade deal with China is imminent, could happen this weekend. I mean, and Trump too. China wants to make a deal, this and that. And I mean, they've basically been just sort of using that as sort of, every time the market goes down, they come out with some up to and including yesterday, which blew my mind, right? So yesterday the market, was having like this pullback or whatever, and then here, after lunch or whatever, Trump comes out and says, or right around lunchtime, Trump comes out and says China wants to make a deal, right? And just like he did last November. And so, and I don't believe anything that these guys say anymore. And so there's people that are looking towards a trade deal with China. I mean, they're grasping at straws, thinking that something's going to happen at the G20 or whatever. So it's likely to keep dragging on, And then a couple of days later, he will talk about how it'll seem like it's escalating, right? But anyway, long story short, you got the whole month of May, the market just sort of drifted higher up to new highs. Everybody got extremely complacent. Then you had Fed Day, and you got the reversal and fairly significant, pullback. Fairly significant pullback. Now it did hold this low here, which was kind of interesting, right? Like this whole like reversal off of that low and just slingshot higher. Yeah, it seems a little weird, if not suspicious to me, but that's the way the market is nowadays. I haven't really come to terms with how I feel about, people say the market's manipulated, and I haven't really come to terms with how I feel about that. Now I do know that back here in December, that I mean, they admitted for they admitted Mnuchin called the plunge protection team, right? Plunge protection team steps in. I mean, for years that had been sort of the president's working group on markets. Was kind of that was kind of a conspiracy theory thing, right? And so, this time around, or at least back here, Trump came out and said, "Hey, this is a good time to buy the stock market." And you remember, like right around Christmas and the New Year's, Mnuchin called the banks to see if they were liquid, and the plunge protection team, all that stuff. And so it was kind of a interesting coincidence about after selling off like literally 20%, that all of a sudden the market just reversed, put in a V bottom, and and literally like straight back to the new highs within 5 months, right? So anyway, all that fun stuff aside, you just had a big sell off, and so consequently, our system took a lot of small stop outs, and the stop outs, strings of stop outs, and they were sort of based on how far an open trade had moved and how far the stop had been moved before the market pulled back. So anyway, that's just sort of the nature of the system, and I'm every day, every week that goes by, I become a little bit more in tune with how the system is actually functioning and what it does during these cycles. One thing that I noticed is like this current cycle up here, this current rally that we're having up here. Some of the open trades, and of course, we also had an earnings season sort of sprinkled in here too, and so that's like sort of a function of it. But I noticed that that a lot of the trades that didn't get stopped out have really gone and made some big moves. I mean, some of these things, like this AEM, this thing's been open since the end of April. Let's take a look at that. That thing's been open for a long time, so yeah, basically it triggered over here like during all this noise, and just sort of chopped around sideways for the longest time and then took off. Right? So that's kind of unusual. I don't remember since the beginning of the year. I'm not sure that we've had anything open quite that long. I could be wrong. Let's see what else. Oh, we had a couple of buyouts. We had the Cray, and then of course this CY, which I never did. I never did actually mark the entry on this, but this thing got bought out pretty soon here within the next week or so. This thing will just close. This will just come off the open trades here, but the JK Solar is this is one of the more interesting ones because I know we talked about this one back over here. For whatever reason, it kind of piqued my interest, and so we've talked about this one quite a bit over the past couple of months, and it continues to look great. It really does. This is a beautiful sort of stair step pattern higher. Notice how it like takes a big move higher and then consolidates for a little bit. This move, and so I would expect some consolidation or whatever, and this may or may not be done. So interesting thing about this one is how this target, this or I'm sorry, target, the trailing stop. This is the trailing stop as of today. This thing is really sort of hanging back here, which I find kind of amazing that it's hanging back so far, but it is what it is. And notice that notice that there was a parabolic stop that kicked in, right after this day. So this parabolic stop kicked in on this day, 6/6, and it was like right just below the low of the prior day. Let's see, that low was 2202, parabolic stop at 22, and so basically, that's something like this. That's the stop that I'd be using. Although, I'd expect this trailing stop to work its way up, and quite frankly, well, hang on a sec. I want to look at something here because, okay, this parabolic stop. I had a feeling. I didn't look at this yet today. There's another parabolic stop that got generated, and it's up here at. Let me mark it in purple. Yeah, I just pulled this up sort of off the top of my head when I was looking at the gainers on the open positions. So this is at 23.15. What's that low right there? Okay, so in real life, um, this parabolic stop, like when you had this extra sort of push higher to this new high, the low was 23.18, and so this got generated just below that day's low at 23.15, which means it got tagged yesterday. So I just want to mark that on here to have it. P stop 23.15. There we go. Anyhow, not a bad idea in my opinion anyway to once you if you blast through the target like this did, not a bad idea to use these. So anyhow, so that's one that's been sort of hanging on. What I wanted to look at this morning, first of all, was the I want to look at two stocks from 2 weeks ago. I think it was 2 weeks ago. Tempur-Pedic, right? Remember talking about the mattress company thing back over here? Maybe it was 3 4 weeks ago. I don't know, but these there was two stocks that I had jotted down here as like sort of, I guess they were like the focus stocks or whatever that when we looked at a bunch of them. And so Tempur-Pedic was one, and you can see that it's come up here to the target and just sort of hem hawing around, but still looking pretty good. This stop needs to be moved up to 64.80. I've been doing that, and rather than marking every single stop on these things, it just depends. Certain ones, it's kind of interesting to see it stair stepping higher, but other ones, I just basically I just update whatever the current stop is. So that looks about right. 64.80. That's a little. There we go. So yeah, looking pretty good. Waffling around the target. Yeah, this one you can see by sort of that clean uptrend and these real nice clean pullbacks or whatever. I When we originally looked at that one, and even though it chopped around for a week or so before it did anything, it just had a real nice look to it. So and still has a really nice look to it. The only thing I can say is that it has a habit of making higher highs and then sort of returning to like this main trend that it's on right here. And so that's why it wouldn't be a bad idea. I mean, obviously it seems to me that that target's pretty reasonable to hit the target, and so you can always protect your profits. I mean, you can sell some at the target. Everything's sort of open ended and flexible, right? Just because just because the stop happens to be right here now, and I'm sure it's going to move up a little bit. And so really what I get from Jeffrey is that it's designed, like if you wanted to make this sort of an investment, or you were looking at sort of a longer term position trade, the trailing stop is really designed to hang back just far enough to keep you in, as long as like it keeps trending in the same direction it's going. So, but at any time, you could say something like, well, I sold half a position here at the target, and I'm hanging on to the other half, but you know what? I'm going to protect it, right below yesterday's low. You know, that's completely viable if you've been in something for a while. The other one was SMG, Scott's Miracle Grow. Remember talking about that over here? Those were the two from a few weeks ago that when we looked at them, that I had jotted down as being like sort of the ones I thought that looked pretty, or maybe those were the only two that triggered on a particular day. I don't know, but anyway, same thing here. Looking pretty good. Hit the target. It's kind of meandering and stalling out, around this level here, which makes perfect sense. So The trailing stop on this is moved up a little bit to 90.05. So that's gonna be like up here. Let me change that. 90.05. Slide that up a little bit. So, and the funny thing is that this trigger here, I mean, this looks like a big run up, right? But this trigger's at 89. That stop's finally made it past the entry, and just barely. I mean, only by a buck, right? And even though the stock itself, is been up over $5 here, so that's just kind of interesting. But all right, so let's see. Moving on here. Oh, there's one more I wanted to look at real quick, is because Apple of all stocks, showed up on here with a trigger price of 180.10, which it happened to gap over, right? So kind of interesting though. I mean, because we hadn't seen Apple show up on here, but you guys remember, way back here in January and February, we were talking about Apple, and the problem is that it couldn't have triggered based on our system back in the beginning of the year, because it wasn't lined up, in an uptrend basically. I mean, this was not what you call a pullback. This is what you call a huge sell off. And so basically it had to establish a new uptrend and then have a pullback. So I mean, that's just the system. Somehow or other, the system, figured out that well, obviously this is not an uptrend, right? I mean, yeah, I mean, if you just look, there's no way that you could, that back over here at the beginning of the year, you could say that Apple was in like an uptrend. And when we talk about uptrend, it's typically like on a shorter sort of time frame, like a few months, rather than looking at something like a 200-day moving average. But anyway, long story short, so Jeffrey came on the show and talked about how he really sort of liked Apple back over here, and we were looking at different things. That's where these marks come from, is like, But anyway, I find it kind of interesting that, okay, so Apple established an uptrend and then actually did have, a relatively deep pullback, but the system identified it as, a pullback from an uptrend, and so here we go. So gapped over like the trigger day. It gapped over the trigger, so the trigger day would have been, basically an entry anywhere that following day. Um, Now I didn't mark the initial stop, but I'm gonna guess it would have been, down around the low of this pivot low. And so anyway, consequently, consequently, it's just amazing to me is that as of last night, as of the close yesterday, this is like a 8% away from the trigger. Not, so you're talking like maybe about a 6% move, realistically about a 6% move from, you know, where you would have theoretically got in. And now that stop has come all the way up to break even there. So it's going to be interesting to see what happens here. Apple's kind of a proxy for the overall market, and so, here's the thing is like a lot of people a lot of people look for good entry points on stocks like that, right? Like suppose you were, running a hedge fund or something. I mean, obviously like every single institution and every hedge fund, money manager, I mean, the Swiss National Bank, your 401k, your IRA, mine, Apple's the most widely held stock in the universe. And so, consequently, I'm going to say that most institutions probably adjust their exposure to Apple, and, based on different things, but there's certain times like, like when Apple has a pullback like this and then starts to reverse. It wouldn't surprise me to if institutions actually like increase their exposure. Like they wait for Apple to pull back and then they buy more, right? So long story short, that was a pretty good entry point. Pretty decent little entry point there. And now that the stop's essentially, I mean, the stop's actually at break even, right? And so obviously, if you just pulled the trigger at the open the following day there, you'd have a little bit higher cost basis. But I'm finding, especially with the market acting sort of, weird here, I'm sort of finding that and I mean, again, this is a little bit of a judgment thing, but not necessarily just, you know, like you see a close above the trigger, and actually, what I'm about to say here is, if the trigger was 180.10, I know this is confusing. The trigger was 180.10, right, which was above the close, so it never closed above the trigger this day. So this is the day that it actually closed above the trigger, the one that I have circled, and and so the last price there was 182.54, right? And so theoretically, I'm just going to put theoretically your entry price would have been the next morning, somewhere around, somewhere the next morning around the open. So there you go. And so realistically, like, the open price was at 183, and on $180 stock, $3 isn't a huge big deal. So anyway, so if you just stuck to the if you sort of stuck to the rules, you would have bought at 183, and here we are at 195, and so it's you know stock like this, you don't necessarily sweat the small stuff. The important thing is, what happens from here, obviously. So I say it was a pretty good entry, to be honest with you. So anyhow, let's see, what I wanted to look at here was, oh, hang on, before I move on, real quick, the review of the four stocks from last week. MRVL. Right, so this is last Wednesday. We went through all the stocks that had just triggered, and there was a whole bunch of them. We jammed through a whole bunch of charts, right? And I basically I picked four that I jotted down here that I thought looked the best, and so this was kind of a weird one, because last Wednesday it had closed way past the trigger, gapped up, and when we started talking about it, it kind of pulled back, and so yeah, it's typical, but there you go. I mean, it's still valid. It had that run up to the target, a little past it. Now it's looking a little. I got to tell you, it's looking a little vulnerable, along with the whole market. So there's a few stocks that I've noticed that they essentially trade on the same pattern as the market. This one's kind of similar. A lot of the semiconductor stocks. So anyway, it is what it is. That stop is still not quite at break even yet. And obviously, the entry would have been a little bit higher here. So, Jeffrey always talks about, three three bars with lows that are higher than the entry. You can move the stop to break even, right? And so that actually fits in this scenario. So you'd want to be, it's close enough. You'd want to be at break even here. This stop probably will come up tonight. But I mean, also, part of it is this target up here. The system has targets for a reason, and so when a stock hits the target, it might not be a bad idea to sell some or all at the target and then look for the next one, right? So moving on, this PARR looks like it sort of petered out here, right? Let me verify I got that stop in the right place. 1945, boy, is it close. 1947. I don't even know what these guys do. And this was a pretty nice looking chart, I got to admit. Nice uptrend. pullback, but you see this a lot. And quite frankly, this is a good example of why a lot of stocks that don't when they make the turn, they don't get enough follow through, and they sort of roll back over. And this is an example why we get a lot of small stop outs, is because that stop ratchets up. And so it ratchets up. So if you get any sort of little pullback, then it's out, right? And so, in theory, if you entered, around the trigger price, and then you get that initial stop, like at the low, is basically at the low, just below the low of the whole pattern. And so it may or may not come all the way back down here and break down. It could zigzag around and then take back off and go on to make a new high. But that's just sort of the one of the nature of the system, one of the behaviors that I've observed, is that that's the reason why stocks that don't get the follow through and they don't just keep trending, if they start to pull back, then they will get knocked out for, like, a small loss, right? So, couple of percent, a few percent, which I suppose is good. So, and again, I mean, if you did a bunch of research on this and you were like, wow, I don't even know what these guys do, but if you said, oh, they pay a dividend and they're profitable and they're growing and the trend looks good and I mean this and that, you could always choose to say, hey, well, I'm going to give it a little bit of wiggle room and just put my stop at the low of the pattern and see if. But the thing of it is, there's so many to choose from and so many different ways to play it. So probably not a great example of one that you just want to hang on to. But I'm just throwing that out there just in case. So it's probably best to figure out a strategy and stick to it. So RCM, yeah, same sort of thing, I suppose. This is a pretty nice uptrend it's got going here. I'm just going over the stocks from last week that I thought looked the best. And so same sort of thing here. Funny thing is that this stalled out right where you would expect it to, like right near the high, right? I mean, it triggered in at like 12 here, pushed up, and you can see that these are only 25-cent increments here, and so this is not a volatile a stock that moves in huge ranges. All those percentages are fairly significant, but so anyway, there you go. This RCM's kind of as of yesterday's close, it was 1.5% below the trigger. After probably being a percent or so. Well, I mean 50 cents above the trigger. So not much really happening here. Although hey, this is you talk about a stock in an uptrend. This stock is. You zoom back on that chart. I mean, this stock has got a decent trajectory and uptrend going here. So it's funny how it sort of stalled out right at almost literally made a double top there. And so looks to me like it wouldn't surprise me to see this thing pull right back into here, but watch that trend line. And then last but not least, GLDD, which is this one I kind of liked. And these are some pretty long range days here, right? I mean, this particular day, right before it triggered, and the trigger was up here, 1080. So it's basically just hanging right around the trigger price. It did get some follow through, hit a new high. Now it's just kind of pulling back and consolidating, and quite honestly, it still looks pretty good. It really does. You got this sort of breakout of. Move that down a little bit. Got like this sort of breakout here of this channel pushed higher, and apparently there was some sellers up here, but it's still a pretty good looking stock. So there's a few spots on the chart where it hit a new high, consolidated, hit a new high, consolidated, that type of thing. And so that's kind of what it's doing here. So it's got a good look to it, quite frankly. Um, just sort of those 3 days, that move up right there, just kind of pull them back in a little bit. So anyhow, that's that. Let's see, what else do I want to look at? Uh, uh, look down at my look at my list. Oh, before I forget. Oh, geez, this was okay. I'm running out of time here. Here's what I wanted to look at, and we'll go through these really quick here. Um, for today, there is two, four. There's 5 stocks that are showing that are theoretically would be triggering in today, right? And that was I'm circling back around because at the beginning of the show, that's what I said I wanted to look at was the stocks that were triggering in today, what they looked like. So um, Facebook, geez, Facebook's kind of like in the news. I can't say I'm a huge fan of this chart pattern, right? Facebook's always had like the chart's always been kind of bizarre, but in theory, what we're seeing here is a pullback in an uptrend, uptrend since the beginning of the year, just like about everything else. But there's a trend line break, right? I guess this big down day right here, like that sort of free fall or whatever, really makes the chart look sort of ugly, right? And so, I mean, in the big scheme of things, that doesn't necessarily mean anything. You get like, people panic out of the stock, or there was like some news there. I mean, I'm not a huge fan of Facebook. I've never joined Facebook for one thing, and I'm not a huge fan of Facebook. And they've got they're going to have a big gigantic fine, and so and I don't think anybody knows how much that is. And so I mean, it's just a very controversial company. But anyway, so Facebook is theoretically just the system doesn't know any better, right? Like the system itself. It's just all it is a ticker symbol and and price data, and what it's seeing is like a pullback and a rebound starting. So to me, it looks like a ton of overhead resistance. Anyway, the trigger price was 175.25, and what was the close this day? 174.82. So basically, basically the trigger would have been at yesterday's close. Like yesterday was the day it closed above the trigger, right? And of course, today it's trading above the trigger, but I just don't, I'm not particularly fond of what this thing looks like. So, over here it triggered in, had a pretty decent little rally, didn't quite make it to the target, and came back over and hit the I guess what it hit. That's the trailing stop that took it out, and so a couple of bucks or whatever. So anyway, I would probably just avoid Facebook. So let's see, something called Manpower. Manpower's got a similar sort of trend line break, but it looks a little bit better. Here's the interesting thing about this. The trigger is 90.85. All right, so let's look at this, because I mean it's triggering for today, right? And so this is kind of important, I would say. 90.85 is up here, so this stock today has not traded above the trigger, right? So there's a trigger price. On Monday, it didn't close above the trigger, right? Yesterday, it closed above the trigger. So the basic idea is you wait for a stock to have a close above the trigger, and then you look to enter it the following day, as long as it's trading above the trigger. Well, guess what? So this MAN is not so far. Now it could rally. It market rally this afternoon touched the trigger, in which case it would be a valid entry. However, if for some reason this thing does not trade at 90.85 today, let me jot that down too, because I want to. This is one I want to keep a close eye on because in theory, well, not in theory, in practice, if this stock does not trade above the trigger today, then it's gonna come off the list. It's no longer going to be a triggered trade, right? Or on the open list. Basically, what happens is they automatically, like this will automatically appear on the open list this morning just because it triggered, because that's the way the software is set up. But if it doesn't actually trade at that trigger price, it's going to come off of the open list. So, but hey, bigger scheme of things, this could easily, obviously depending on market conditions, but it's kind of a, I don't know about this lower trend line being anything that's I don't like the lower trend line. But anyway, you got a trend line break there. Had a pretty nice move here and a little bit of consolidation, but it could just as easily be working its way back up to a new high there. So my guess is this is earnings, right? And so that's kind of I see a really nice like sort of flat top breakout here, right? So you had a really nice sort of a breakout, and then that was probably earnings, and then it's probably spent the last month and a half kind of consolidating that big long range earnings move, and it's starting to come out of it and act like it wants to turn back up. So it's actually got a pretty decent look to it, right? So anyway, but it's an odd sort of, the minutia of the trigger is a little bit interesting here, and quite honestly, that's a good thing because that way you understand how everything works, because this is not a common situation. I mean, typically, when you get a close above the trigger price, the next day, some of the price, enough of the price action, even at the open or whatever, is also above the trigger price. Because a lot of times, like in this case, it closed fairly, significantly above the trigger, right? So the last thing you would expect is to get up this morning and think, oh, maybe I'll look for a little bit of a pullback, into the 91s, and then here it's not even, it's trading below the trigger. I would have never expected that. So. Moving on, LYV. This one actually looks good. Out of the first three we've looked at here, 62.60. This is the one that looks the best to me. So let's see, 62.60 would be somewhere right around there, and close above the trigger yesterday. This one's got a pretty good look to it. You got a really nice pullback, and then the pivot low there starting to come back up. Nice uptrend, and then sort of a reasonable, I would say reasonable pullback. It looks like it pulled back to basically test the support from this earnings pop. I'm gonna guess that's a big earnings pop, right? And then got some continuation, like after the earnings pop or whatever, there was a few days there that had kind of lows, and so came back and tested that and bounced off of it. Now, if it rolled over and broke down below that, it'd be a big giant ugly top, but that's not what it's doing, right? Like as far as like right now, it looks to be like it sort of retested that support and is bouncing off of it. Now, a little bit of it is the market pulling back and then the market reversing. So if we get weakness in the market here, you have to be careful with this. So FITB, Fifth Third Bank. Notice the increments. This thing has like a 1.8% average range, and there's some interesting swings here. My goodness. I mean, look at these swings on this thing. But That's kind of yeah, I don't know if that's a good thing or a bad thing. So the strange thing about this is that on the average day it does is doing nothing, and then all of a sudden, like out of the blue, you get like either a huge sell off or a huge sort of rally. So well, let's see, 2740. I'm honestly not a huge fan of financials at this point in time because the financials, while you got all these people, and here's another one too. Let's see, the high here, the high today is 2737, right? And and the trigger price is 2740. So let me just put that there. And so this is another one that has not triggered in, right? So keep that in mind that this also may come off the list. Let's see. What I was about to say is the financials have a problem, right? If the Fed cuts rates, the financials are probably likely to sell off because banks and financials tend to rise in tend to do well in a rising rate environment, I suppose, right? And so that's always like the story. And so here's the thing: if the Fed is looking to cut rates, then I think financials are probably not the place to be. And if the Fed doesn't cut rates, and then the whole market's going to sell off, and they're going to probably sell off with them, or maybe maybe not. But I'm not a huge fan of this chart. Although if it got something going, like there seems to be, I don't want to mess this up, but there seems to be like a spot right there. I'm going to I'm gonna draw something in a different color just to point this out real quick before I move on. If you put a horizontal line above yesterday's high and above these highs, and you zoom out on this chart, that was a big rally up there, and it is kind of like a little cupping sort of pattern. And so in theory, there is some potential here for this to sort of cup up, break above here, and come back up, towards 30 or whatever. But it's a little bit of a shallow pullback, so I'm not particularly fond of this. So last one is ZYNE, which this is a beauty. I mean, this is I was they're in alphabetic or not alphabetical order. They're in some order here that I think is random, but the order I was going in was from the top to the bottom, and so it just so happens that the best was saved for last. Look at this beautiful stair step pattern higher. I mean, look at this rally here. This sucker's gone from being a $4.50 stock, $5.50 stock, to having like these just marches up here into the 16s. And so this is a beauty. And so look at that, real nice, like sort of, well, I guess you could call that orderly pullback, trend line break, you know, big move higher, and then today like a pullback right to the trigger price. Trigger price is 1235. Today's low is 1230. Stops like right down here. So yeah, this is a beauty. One like this, I mean, and this is going to be really volatile, but if this is just sort of like a normal pullback like it's had here, just on a bigger scale, right? Like this little beautiful little triangle back here. And here's the thing is, these a little $4 stock or whatever, $4 or $5 stocks, not gonna be a candidate, but you can sort of see what's happening with this thing. And look at the volume too, right? There's another sort of clue. That volume yesterday was 6.8 million shares, and this is a pharmaceutical, so it's obviously it's extremely volatile, and and this thing could just as easily, like, take another leg down. That could have been the whole shebang right there. I mean, sometimes with biotechs and pharmas, you get, like, you get these kind of moves where, it goes from 4 to 16, and then, the party's over, and, that first sort of, this is like the summit of the mountain. I mean, that's obviously, it's obviously like a massive, pivot high on this chart. But stocks like this, at the same time, have the potential for, this first big sort of pullback. It has the potential to just power higher like it did over here. So keep that in mind. Anyway, so somewhere in the 12s here looks fairly reasonable. And here's the thing: is if you look over here too, I mean, some people this is their cup of tea, and some it's not, right? So like the other one we looked at, one of these other ones, the LYV I think, or MAN, one of those two, looked a little bit better if you're looking for something tame. But this sucker's got a 9.2% average daily range, which means you can expect some huge wild swings, right? So just for the fun of it, the target on this, I'm going to mark the target, is 1550, which is, basically up here. So if you're looking for action, this would be the one to think about. But like Jeffrey always says, something like this, it's trading 9% average daily range. You'd want to have a really small position. I mean, because that the initial stop here is like, roughly 20%, right? So you buy if you bought 100 shares for 12.35, and you get that's a $200 loss down to that stop. So tread carefully on a stock that has a 9% average daily range. But at the same time, that stop's gonna come up, right? Like that stop, within the next couple of days, that stop's gonna start coming up, and so be interesting. If anything, this will be a really interesting one to keep an eye on, just because of that volatility. So anyhow, so that's it. I went a little bit extra today, but that's okay. We looked at a lot of stuff, and I appreciate you coming on. And so I will see you back here next Wednesday.